My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. I love my job, but I don't love being a human piñata, which unfortunately goes with the territory. So on a nice day where the Dow inched up 26 points, S&P advanced 0.58%, NASDAQ gained 1.05%. Let's try to understand each other. I catch a lot of flack for what I do. Nature of the business. I try not to dignify the haters with my attention. But this weekend, I got attacked not once, but twice for telling people to buy NVIDIA, even as these critics pointed out the darn stock goes down every day. One of them even called the stock a dog, which is pure sacrilege, given that I actually named my late pit bull mutt NVIDIA. That would really hurt, especially when NVIDIA, the stock, not the late dog, actually rallied 29 points today. Oh, the indignity of being called out in front of others for something I am quite proud of, praising NVIDIA, the company, every time, every chance I can get. So I want to use this relatively rare update for NASDAQ as a teachable moment about what I do for a living, which is doing everything I can to try to help you become a better investor. Along the way, I identify my favorite stocks and buy them for my charitable trust, a process I lay out in my investing club bulletins, roundups, and monthly meetings, as well as my morning meeting and even the home stretch. And by the way, the next big meeting, our club meeting, convenes Thursday at noon. I hope you'll join us. When it comes to the charitable trust, NVIDIA is one of our longest-standing positions. Now, I originally bought it for the trust after I met the CEO of Audi North America more than a decade ago. I asked him about the incredible technology in his cars, and he said a ton of it was based on the company called NVIDIA. I couldn't believe it. I found it very curious. See, I thought NVIDIA only made video game chips. I told him so. He unhesitatingly came back and said I had to do more homework. And that's when I realized how wrong I'd been. The fastest chips, the ones with the best ability to project colors and movement, all belong to NVIDIA, not any of the major semi companies. At that point, NVIDIA stock was worth about $8 billion, not the trillion-dollar behemoth it's become. Now, I should have known NVIDIA would have a bright future. In the real old days, long before this encounter with Audi, I was great friends with a member of Intel's board of directors. He'd pushed the company hard to get into graphics chips, but Intel's management foolishly decided to leave this area to others. So I turned positive in this one back then, and it's been among the best calls of my entire life. Now, there have been moments where I've been more cautious on the stock of NVIDIA because I don't want to hurt people. The stock got clocked in late 2018 when they lost their ability to judge their inventory needs because so many of their cars were being bought by crypto maniacs to mine Bitcoin and Ethereum. When crypto sold off, that demand vanished. NVIDIA, well, its stock got put through the meat grinder. There's been other times when I've been asked whether it's still safe to buy NVIDIA after a big run, especially when we're going into earnings. I typically say I don't want to play that game. I like NVIDIA, but I dislike playing what I call earnings roulette, which brings me to lesson one. I am not a hedge fund manager anymore, and I'm not trying to teach you how to be a hedge fund manager. At my old hedge fund, I'd actively try to game a quarter, read the research, find out the whisper number, meaning the most bullish stretch goal, by speaking to the research analysts, and then bet on whether the company would go up or down after the results. That's pure trading, not investing. These days, I can't even attempt to play that game. I don't speak to many analysts. I don't know what the whisper number is. I just know I like the company. These days, if the stock gets hit, I'll see if the quarter is actually disappointing or it's merely a speed bump, meaning the stock can be bought. The possibility of a huge upside surprise is merely the icing on the cake. See, I've come to the conclusion that what matters is the long term, not the quarter. Now, the late, great Andy Grove, longtime CEO of Intel and one of its founders, explained that a quarter is a reasonable proxy, a good period to judge a company, as one of the... By the way, he wrote a book called Only the Paranoid Survive. He lays all this out. I used to believe that he was right, but there are too many companies with stocks that break down even when the business is doing well. 3 months might be a reasonable period to analyze how a company's doing, but that doesn't mean the market can always analyze those 3 months accurately with how the stock is doing. That's why I'm extremely hesitant to pound the table on anything right before the quarter, just as a matter of principle. I don't want to, and I don't need to. Now, when the stock goes up post-earnings, I'm hated for not recommending it aggressively enough. When the stock goes down, I'm vilified for not telling people to get out. Either way, I get pilloried. But I'm still not going to play the earnings guessing game because it's just not helpful. It's not what I teach. It's not what I do. Now, how about lesson number 2? When I say I own NVIDIA and that you should own NVIDIA, don't trade it. What that means is as long as the fundamentals stay good, there's no reason to do anything except sit on the stock. It does drive me crazy that if you bought the stock at 480, it's high, and then it drops to 400, you're going to be furious at me. Of course, I never said you had to buy NVIDIA at any price, no matter what. I said own it. I can't slap your hand for paying up after a big run, but even as I hate to change, but I just say own it. Now, if you top tick NVIDIA and now despise me, I say knock yourself out. I got so many haters already. What's a few more? We own the stock for the Travel Trust. We don't feel compelled to tell you that today is the day to buy NVIDIA. Up 30, got to buy something. We just like it. When I get angry and tell you to sell it if you're mad at me, I don't literally mean that people should go sell the stock of NVIDIA, for heaven's sakes, which is what I heard said about me all morning by some real morons. I was being glib, which is how I tend to get myself in trouble. I call it a Philly fan instinct. What I mean is that you shouldn't own a stock like NVIDIA if you have a trading mindset where you want an instant gain and can't tolerate short-term loss. With NVIDIA, you need an investor's mindset. That's the only way to handle the numerous downdrafts the stock often finds itself in over the years, from $8 billion to $1 trillion in market value. If you can't handle the darn volatility, there's no reason to own something like NVIDIA. Even my favorite stocks aren't for everybody, and they can't go up every day. Finally, people need to realize that NVIDIA, like Apple, is the stock equivalent of a living, breathing organism. Apple's going from a computer company to an iPad company, iPod, then it's iPhone, iPad, wearables, service company, everything, right? NVIDIA's going from a graphics card maker to a company that makes the fastest chips in the world. Chips that dominate the generative AI space, okay? Graphical user chips. Perhaps the most important tech breakthrough since the iPhone, or maybe the Wintel personal computer. And these are what things that Jensen Huang, the CEO of NVIDIA, has told me. Given that nobody even comes close to NVIDIA in the AI business, I think its stock is a must-own. Now, I can't tell you when to buy it. I can't tell you the price to buy it. I say you can buy some now and some later at a lower price. Remember, never buy all at once. Let me give you the bottom line here. A very, very tough position for me. This whole lesson is about how to own good stocks, not how to trade stocks. How to invest, not trade. Trading is way too hard, unless maybe you're managing money as a full-time job, and even then it's not easy. But if you want to own a terrific stock that can go up 200% in a year, which is what NVIDIA has done this year, you must recognize that it can also go down hard during the journey. If you can't take the potential pain, then NVIDIA, the stock, is not for you. Brenda in North Carolina. Brenda!
A big booyah, Jim, from Brenda in North Carolina.
Booyah right back at you.
Thank you for making us lots of money.
You bet.
Hey, I don't know what to do with my shares of Johnson & Johnson, whether to take the spin-off to keep the Johnson & Johnson or just sell Johnson & Johnson for Eli Lilly.
Okay.
Any help would certainly be appreciated.
Well, Brenda, first of all, thank you for the kind words. Second, I would do the latter. Johnson & Johnson, I own. We had a nice, small, not big gain in the stock. And I got tired of worrying about this asbestos issue and ovarian cancer and talc. And I decided, well, there's other mesothelioma. I decided that's it. I'm done. I say sell J&J and go with something which is actually less controversial, which is Eli Lilly. I think it makes sense. How about Sonny in Illinois? Sonny!
Hey, Jim, a big Chicago Windy City Benny's beverage. Booyah to you.
Talking about going there myself just today. Cannot wait. What's going on?
Hey, my friend, longtime fan, investment club member. Love what you do for us.
Thank you so much. I'll see you at the Thursday meeting, of course.
Yes, sir. And hey, Jim, you know what my favorite book is?
No.
Get Rich Carefully.
Oh, thank you. Yeah, I got to do a revival of that book in another way, just to catch up on all the things we now know. How can I help you, kind sir?
I tell all my friends about that book, man. I'm waiting for you to come out with your new book.
Oh, yeah, it's coming. I'm working. Taking a little time. Got a lot on my plate.
Man.
That's all right.
You got to take a break. You got to take a break.
I take some days off now and then. What's going on?
Well, I'm looking at a company that provides luxury accessories, branded lifestyles in the U.S., Japan, China, internationally.
Okay.
This company recently increased a quarterly dividend by 3.7%. And they have recently announced an acquisition. The company I'm looking at is Tapestry, and they just recently announced that they're going to acquire Capri. Jim, what are your thoughts on Tapestry?
I am not a fan, and I'll tell you why. As interesting as that deal was, I don't think it makes a lot of sense because they took down they lost a lot of money. How about Ralph Lauren, RL, which had a terrific quarter and is now down pretty much nonstop from its high of 135 all the way to 121. At one point, it was down almost $1.50 today. RL is the stock for you, and thank you for those incredibly kind comments, and I'm so glad that we'll be together Thursday at noon for our club meeting. If you want to own a terrific stock like NVIDIA that can go up 200% a year as it did at one point this year, you must recognize that it can also go down hard at times. This is why I say own it, don't trade it. On Mad Money tonight, it's a tale of two consumer products companies, Newell and Getty. One is soared and the other one's faltered, but could both be worth buying. I'll give you my take. Then, it hasn't been a magical year for Disney, of course, but is the stock ready to roar, or should investors look elsewhere if the stock can ever go up? I'm going to go off the charts to find out. And you stumped me on a company called Sterling Infrastructure after monster run this week. I'm sharing where I come down on the stock now that you called in about it. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.